I think it's important to understand what drives the economy in Nigeria. And for me, the external is at least as important as what happens internally. And when I say the external, I always consider 4 parameters. Certainly, what happens to international policy is very important. And I think in this regard, there are 2 dimensions to which attention should be paid. The first is what happens as far as interest rates are concerned. What happens as far as international interest rates are concerned? And I think if one's asking that question, you might say to yourself, we already got forward guidance from the US Fed that interest rates were headed north, in other words, higher. If you look at the US budget, the US fiscal position is actually worsening. In 2019, we expect that the US deficit should be $20 billion short of $1 trillion. And that figure would be roughly 18% higher than what it was in 2018. So we're expecting that in 2019, US interest rates are going to be higher, and they will drive international interest rates up. Of course, uncertainty around Brexit doesn't help the European position. And notwithstanding the fact that the Japanese are still in an easing mode, I think the sense generally is, and the IMF confirms this, that interest rates are headed north. For Nigeria, bad news that is, because what it does mean is higher international interest rates reduce our attractiveness as a destination, certainly for portfolio investors. And so that's something to be mindful about. The second of the 4 parameters is trade. Trade, as I'm sure you know, has become a vexed issue over the last 12 to 18 months, especially trade relations between the United States and the Chinese. But Nigeria's interest in trade actually is more around oil. What happens to oil and oil prices? The futures market on NYMEX provides me with the basis for my own commentary on oil prices. NYMEX currently tells us that futures 2019 average is about $60, $61 a barrel. My sense, however, is that for 2019, we should expect oil prices to ease below $60 on average, probably drifting in the direction of a range between $50 and $55 a barrel if things hold out. And the reason is not very difficult to understand. If you think about it, there's a glut in global oil markets. Yes, OPEC is taking about 1.2 million barrels of that glut out. But that's actually bad news for Nigeria, because if you, again, reflect on that, Nigeria is committed to an OPEC quota of about 1.6 million barrels of crude oil daily. But then, of course, that excludes condensates. If you add condensates, which should take us to about, we should add another 200,000–300,000 barrels of crude oil. That takes us to roughly 1.9 million barrels. The budget, as laid before the National Assembly, is predicated on an oil volume of about 2.3 million barrels of crude oil. So what that is saying, therefore, is that the international environment as far as oil is concerned isn't particularly favorable, both on the price side and on the quantity side. And let me perhaps even worsen that on the quantity side. Any analyst who has looked at Nigeria's oil production over the last 30 years or thereabout will discover one interesting parameter or one interesting characteristic. And that is that in the year ahead of an election, Nigeria's crude oil production goes down. And as I keep explaining, no self-respecting militant will breach oil pipelines after an election. It's better to breach them well before an election so that alignment of view can be obtained. In 2018, in the first half, we saw 200 breaches of Nigeria's oil crude pipelines. And I understand, even though I haven't seen the figures for the second half, but I understand that it was worse in October 2018. So the oil scenario is not looking good. The two other parameters internationally that I pay attention to, one is capital flows. Once upon a time, $20 billion of inflows came Nigeria's way. Today, well, I think that is now history. And what worsens our challenge around capital flows is the uncertainty of elections. Let me make this clear. This is not a Nigeria-specific challenge. Everywhere in the world where there's an election imminent, international capital tends to go out to wait until the electoral processes are concluded. For Nigeria, therefore, and this is one of the key points that I will make today, and I have made several, the imperative of a successful election cannot be understated. Let me repeat that. I'm not saying who wins or who loses. That's almost neither here nor there. But what would be ideal for Nigeria is most certainly to avoid the Kenya scenario and, if possible, to replay Nigeria's 2015 experience. And I'm sure you recall that even in 2015, there was a 15-minute period where we thought all was lost. And then those who had control called down those who weren't in control, and then we had a successful election. A victor was declared, and the losers went home. I'm not sure whether they went home cheerfully, but they certainly went home without protesting. What would be ideal for us is electoral outcomes that are successful. So, the fourth parameter is that parameter that I've put there, diaspora flows. I always put that there, and the reason is simple. The World Bank estimates that somewhere around about $22, $24 billion of diaspora flows come into Nigeria. And for an exchange such as yours, it might be interesting to find out what is this money, first of all, who gets it, how much, and in what kind of characteristics, but what do they spend it on? You just might find investable income generated from there. So, the international environment is not particularly set fair. If you look, there are a couple of things about what happens to trade internationally. International trade is already slowing down. The figures for 2018 already shows that. A key parameter is going to be that the Chinese and the Americans come to an agreement. My sense is they will. It's in both their interests. And in case you worry, as some of us do, I don't worry about the Chinese. I worry more about the Americans. And let me explain that so that you understand me. America has seen 9 years continuous growth. But remember what I said about US interest rates heading north. Now that is likely to slow the economy down. Let us hope it doesn't tilt it down further, down enough to head into negative territory. So some of us expect that US growth will slow with interesting implications for the rest of the world. Now, I've spoken about oil prices, but I think the one that really is of some interest to me is the US dollar. On the back of high US interest rates and rising interest rate, the dollar will strengthen. I'm already clear in my mind that the Nigerian naira is probably already overvalued. I argue that the naira is probably as high as 10% overvalued, and that to that extent, post-election, we're going to have to start thinking what happens here. Right. So that said, on the domestic side, well, the important thing to bear in mind is that, as I said, we're growing, but we're growing very slowly. I'll come back to this in a minute. But this is, in my view, more interesting. Notwithstanding that we're growing, please note, 1/4 of Nigeria's economy is still contracting. And those are the sectors, ranging from basic iron and steel through to post and courier services. 1/4 of this economy is still in contracting mode. 2/3, just short of, 2/3 is growing but slowly. How do I determine when growth is slow? If the economy is supposed to be, if the population is growing at somewhere between 2.5 and 3%, any sector that grows slower than that must be slow growing. And then those that are growing faster than 3% represent slightly over 10% of the economy. So right now, where we are, growing in aggregate, slow but fragile. 1/4 of this economy is still in recession. What else, as far as the domestic economy is concerned? Well, inflation's eased 12.2 from about 16%, so life looks good, at least on the inflationary side. But then be careful, because as the Phillips curve would suggest to any economist, lower inflation appears to have been achieved at the cost of much, much higher unemployment. I worry about unemployment, especially from a social and security perspective, that as a country, we really cannot afford to keep unemployment at these kind of levels. Something else that is pretty clear from the data, what is clear from Nigeria's data is that income is concentrating upwards. If you look, the composition of income shows for Nigeria is that the guys in the top 10% over the last decade have seen something close to a 5–6% increase in their share of consumption. Everyone else has seen a reduction in theirs. And so when I say that whilst on average, every Nigerian is entitled to 4 barrels of crude oil annually, you who are seated here obviously are consuming just for breakfast more than 4 barrels. Now, this is something that I think is important, especially for the institution that's hosting us today. What this shows you is that corporates are in trouble and under pressure. And let me explain it. The bottom part, there are 4 lines there. One's black, one's blue. Those 2 represent demand. And as you can see, they are down. So demand is weak. But the other 2, the orange one and the gray one, the gray broken one is inflation, consumer price inflation. That represents the rate at which individuals, shall we say, that companies pass costs on to individuals, into households. The orange one represents the rate at which company costs are rising. And currently, company costs are rising faster than inflation, which therefore means that companies are under pressure. They are hemorrhaging margins. They are hemorrhaging margins. Therefore, in 2019, one of the things that one would expect to see is that if, as I expect, output continues to grow, albeit slowly, corporates will have to face the challenge of efficiency. How do we cut our costs in order to retain profitability?